We're all horrified by the images that we're seeing every night on the news, and are shocked by the tragedy that's unfolding there. So in a sense, how corporations are managing through it is secondary to the human suffering. Nevertheless, it is our responsibility as managers of an important bank to steer our institution through the volatility that we've seen and the impacts. As a starting point, we put some disclosure out last night to share with investors our very low net exposure to the Russian Federation or Russian obligors. As we announced last night, it's about 1.4 billion on a gross basis and only 600 million after collateral and guarantees and what have you. So a very modest exposure that we have. On the market risk side, we've managed, I think, quite successfully through the early days of this crisis. We were defensively positioned. We've moved quickly to ensure that we have our market risks sort of under control and also work with clients through their first reactions to this situation. As it relates to the stock price, it's the market will always react, I think, to a crisis and to the scenarios that unfold and look at the downside scenarios first. And I think then over time, we're able to provide more information. We're able to talk about our trajectory as we're doing later on today. And I hope give investors some comfort as to where this bank is headed.
What have you done to your Russian subsidiary? Have you shut it off, your treasury, or is it still integrated?
So look, we have subsidiaries in both Russia and Ukraine. They continue to operate. They are essentially self-sufficient from both a capital and liquidity perspective. And to their credit, the people in Ukraine have continued to operate our bank, which is really remarkable under the circumstances. The risk also to us in that regard is relatively limited. We included that in our disclosures last night, that we have capital of about 200 million in our Moscow subsidiary. That capital has been fully hedged from a currency perspective, and we're there to support the businesses of our clients, mostly multinationals. And of course, as that diminishes, so too will our presence in Moscow.
Many multinational companies have left the Russian market altogether. Would you consider such a step as well in case the situation is not turning to a better scenario?
Well, look, as I just said, we're there to support our clients.
Yeah.
And so for practical purposes, that isn't an option that's available to us, nor would it be the right thing to do in terms of managing those client relationships and helping them to manage their situation. Of course, we'll need to look at how this situation evolves and consider our footprint in Russia as we gain some greater clarity as to the direction of travel here.
I mean, you have a lot of Mittelstand clients from Germany who are active in the Russian market. What's their main concern right now?
Well, look, as we think about it, there are first, second, and third order impacts of this crisis. As I mentioned, we think the first order impacts we have well in hand, we've managed well. We feel quite comfortable also with what we can see so far in terms of second order impacts. The third order impacts go to questions like supply chain, availability of certain commodities, and also operations that our clients relied on in the Russian Federation or Ukraine. I think it'll take some time for those third order effects to really manifest themselves. We're very quick again in this crisis to open a help desk, support our clients, answer questions about sanctions, and work with them on whether it was financial or also sort of provision questions, trade finance questions. We've been very active with our clients, and we'll help them manage through this situation.
Yeah, you have been mentioning already that the uncertainties right now about the outlook are very high. So especially about the economic impact it might have also on the Eurozone. So what are your expectations? How is the economy going through or getting through that phase?
Look, it's one of those situations in life where the range of outcomes, as we all know, is quite wide. Our economists have looked at if you like, the vulnerability of the European and German economies to this situation, and in a, call it base case, the impact is, I think, relatively manageable. Perhaps a percentage of growth off GDP, off what we would otherwise have achieved in 22. And that's with the backdrop of a growing economy, recovery from the pandemic, still very supportive financial conditions, and also a supportive fiscal backdrop. So in that sense, the ramifications may be relatively contained. It's hard to contemplate, what the range of scenarios are and how that'll play out on the economy. But at least in a base case, it appears to us to be quite manageable.